All right, traders, and welcome to the SPACs attack. Let's get it started. All right, traders, welcome, guys. Welcome to the SPACs attack, where we talk about everything SPAC and also hit some IPOs. I got my sidekick here, Chris Ketchy, in the house. You guys already know the brains to the show, guys. So everybody, let's go ahead and let's get it started. Tell everybody, hit the like down below. Let's go ahead and get it started. Chris, what are you seeing out there, man? There's a lot of headlines.
Yeah, a lot of headlines today, and we do have one new deal. We're pretty excited about the CEO interview we have coming up today, so I want to jump right into headlines here.
All right, so start taking us back, man.
All right, so first up, we have Hyliion Holdings, symbol HYLN. So they got an upgrade today with an overweight recommendation at Barclays and a $20 price target. We've talked a lot about this name, hasn't gotten a lot of attention and has been falling since that merger went through. So this upgrade has put some life into the stock. But we do look forward to hearing more deal announcements from that company to really get it going. Yesterday, we talked about BTWN. So this is the Peter Thiel backed SPAC. Yesterday, there was rumors that they were merging with Tokopedia, which is a leading Indonesian e-commerce company. So now there's reports out that the company may pursue an IPO instead. So now we have shares of BTWN falling. It looks like maybe this won't be the company they get. But again, with Peter Thiel backing this SPAC, if you like the management here, this could be your buying opportunity for that SPAC. Yesterday, we talked about Lordstown Motors, so symbol RIDE, RIDE. So they held a joint press conference with Camping World at 4 p.m. yesterday. And as expected, they announced a partnership that's going to see Camping World help with service and sales of the Endurance electric pickup truck. And then the companies are also working in the future on a electric RV with a goal of late 2021 to introduce an affordable electric RV to the market. So big news out of Lordstown Motors as they kind of expand past that just electric pickup offering from them and that huge old GM plant that they have in Ohio. Next up, we have MP. So MP Materials. Guys, this is one where we had the CEO, James Litinsky, on the show for an interview. Jim Cramer announced that Litinsky will be on Mad Money tonight. So shares are moving higher on that news. Again, we liked hearing from Litinsky in the future of rare earth mining and possibly selling to companies like Tesla in the future as the U.S. cuts their dependence from China in that industry. They're the leading peer play in the U.S. on rare earth mining. So look forward to that interview tonight on Mad Money. Yesterday, we announced two new deals on the show. So symbols THBR and EXPC. So this was the Indie Semiconductor for THBR. Shares closed the day up 3%. And EXPC, Urban Air Mobility Blade, is their merger target. Shares were up 2% on the day. We did have a completed merger announced. So symbol OPES, they are merging with BurgerFi. Their vote was successful yesterday. So this will begin trading as BurgerFi within a couple days. Again, that's a fast casual restaurant play with that deal being completed. And then lastly, so we had a new deal announced this morning. So symbol NPA, this is New Providence Acquisition. So they are taking AST Global public. This is a satellite broadband company being done at a $1.8 billion valuation. So they're launching a space-based satellite network that will allow any phone without any modification of hardware, software, apps to be able to connect directly to satellites. So that network of satellites they call Space Mobile, designed to deliver broadband from space directly to the consumer. So they hope to use existing satellite networks, and then they're going to send their own to support true 5G speed. They have one satellite tested in orbit and more coming. So they said that they're still in the development phase, building their space mobile network, but they are launching another satellite in late 2021. So they don't expect to get to revenue until they launch their first 20 satellites, which they expect in the second half of 2022 for commercial operation in 2023. So this funds kind of their first phase one of construction with the satellites to get those 20 up in space. After that, they expect another $1.2 billion needed to launch another 148 satellites to get to true global coverage. So they did mention in their presentation that they want to possibly work with SpaceX or Blue Origin on potential launch providers. They are partnered with Vodafone to launch this initial service in 2023. Again, Vodafone's one of the leading telecom companies, especially in emerging markets. And Vodafone and American Tower are both investors in the company. So again, this is the space mobile company. We've talked about Virgin Galactic and Momentus merging with Stable Road. So this is another space play on satellites and, you know, kind of that 5G network around the world. So that's it for headlines today, Mitch.
Yeah, you know, one of the things that I've been looking at in a stock that I really looked at in 2020 was Maxar. And that was with space satellites. And as you guys can see, if you guys look up at that chart, Maxar has been ripping and ripping. So I'm definitely going to be paying attention to more and more of these space satellites, because if you take a look, I think this is really where you're going to see kind of more of a really good revenue and kind of consistency in that revenue. I'm not really looking into kind of taking trips out to space. So I'll be more along looking for things like the Sirius XM satellite that was just put out by Maxar and other things like that. All right, so let's go ahead and let's get into our watch list. I know there's a lot of people out there, so definitely if you're new to the show, say hello. This is what we're here for, guys. So let's go ahead and let's get into our watch list to see if there's anything moving out there. All right, guys, before we get into our interview today, let's go ahead and take a look, see what's moving, see what's going a good move today. This is one that, you know, has been pushed down for a while. Helion, we talked about what the catalyst was, but if you look at the chart, I mean, hey guys, we definitely start seeing some buyers stepping in here. I'm going to keep an eye on this one because it doesn't mean that it's completely turned around, but as you can see from this kind of chart, you know, after the merger, it just went straight down. So let's see when the volume really starts picking up and it really finds a bottom. All right, another one that we talked about is MP. That one's going to be on Kramer tonight, so definitely keep an eye out on that one. You got JWS here, up about 4% on the day. If we take a look at this one, you know, this one's really been pushing up, and you know, it had that pullback from 14.50. So we'll keep an eye on it and see if it holds this $13. Okay, another one that I'm going to run through right quickly, and one that, you know, is in that same kind of space kind of area is this SRAC. I'm going to keep an eye on this one as this one retraces here. We'll see if it holds. I'm trying to see if it can get down towards this 14 and kind of hold in this area, move a little sideways for me, and then I'm taking a look at this one. So we'll see what we get in SRAC. I don't know if any of these kind of call out your attention, Chris, that you want to go ahead and take a look at or make some comments about.
So speaking of SRAC and space, I did see that Virgin Galactic, SPCE, is moving higher today. Remember that we did have shares drop yesterday after that failed mission on Saturday. But I do like the space plays here. Another announcement today. SRAC is one I've been watching for a while. So I do like seeing, you know, it moving and getting back up to, you know, those highs there.
Yeah, definitely. You know, we'll keep this one on watch. We also are seeing RIDE take a hit also. If you look here, it's down about 6%. To me, this is kind of more of when you get that fluff piece. You know, I talked about how, you know, you've had those two drives up. Is it going to hold support? Are we going to come back down and test kind of the $17 and $18 area? That's kind of the area where I really am going to be interested in seeing what happens in this area when it holds. And then we'll see if it's going to go and try again for this resistance push. All right, so one of the things that we really do here, guys, is really bring you the experts and the executives that you want to see in the SPAC industry. And I'm really excited about today. I know Chris has been working hard to get this interview. So Chris, let's go ahead and introduce and let's get our guests right on.
Yeah, guys, so I'm excited. We have another exclusive CEO interview here on SPACs Attack, live on Benzinga. So today we're joined by Tim Reeser. Tim Reeser is the CEO and co-founder of Lightning eMotors. He has a bachelor's of science in mechanical engineering from Colorado State University and has been involved with alternative transportation technology since 1990. Prior to co-founding Lightning eMotors, he served as the vice president of Colorado State University Ventures, where he spun out clean tech companies and built the framework to support accelerated growth of spinouts and spin ins at CSU. So, Tim, thanks for joining us today on the show.
Thank you, Chris. Happy to be here.
Yeah, really. One thing I'd like to tell you, Tim. I mean, I'm in Denver, man, so super supportive of anybody from CSU. So definitely support that.
Yeah,
all right.
Great to talk to another Coloradan. I'm fifth generation, so excited to be here, Mitch.
Oh, I'm sure you're enjoying the weather outside. A little snow is good for at least the holiday time. So
indeed.
We'll get right into the questions here to get some of the value out there, guys. So definitely smash the like below, and we'll get Chris right into it.
All right, Tim. So I want to dive into questions here. I guess the first question is the cliche one of why choosing a SPAC here, and how close was Lightning eMotors to taking the traditional IPO route?
Thank you, Chris. And obviously, we've thought a lot about it. And I think it's important to go back about a year because about a year ago, we started having our customers, after they test the vehicles and drive the vehicles for a while, these large fleets would started to say to us about a year ago, Tim, we no longer want to talk about buying 5 or 10. We want to start to talk about buying 100 or 1,000 of these vehicles. How are you going to get there? So when we saw this tremendous accelerating speed and opportunity in front of us that had to happen really at breakneck speed, we said we've got to look for a way to do this in a very, very accelerated fashion. And so obviously you look at IPO and there's that opportunity exists, but it's typically a 12 to 18 month play. Also look at additional private financing, but given both the speed we needed to run and the scale that we needed to run, we felt like we really wanted to look to the public markets. So it left us really saying, how do we get there as fast as possible? And obviously, as many of your other guests have talked about, this is this route is certainly the fastest route in terms of how do you get it done. But I think there's one other aspect that a few people mentioned that I want to mention here, and that is the other opportunity amongst in this route is the opportunity to partner with a group that's already done it really well. So the group that we have partnered with for the SPAC, our SPAC partner, has already, it's 15 executives. They've already run public companies, been CEO and chairman of multiple public companies throughout their team. They've already, been on the boards, already been audit committee people. These folks already know how to do the public company thing. They also know how to take public companies public. So with GigCapital3 as a partner, that's another aspect that really allows us to accelerate. That's different from, if we were doing IPO where you really we'd have to do it ourselves. We'd have to figure all that out ourselves. So being able to come to market with a partner like GigCapital3 really allows us to accelerate the team side and the foundational side of the business to make sure we can take off and accelerate at the rate we see happening right now in the market.
Awesome. I want to talk a little bit about your background. So mentioned that you founded several tech and clean tech companies. How does that experience position you and the company for success in this industry?
So I have a passion around both software and a background in software and a passion around mechanical and mechatronics type activities. And so Lightning has been the ultimate opportunity to combine my two passions in that area. We do a significant amount of software work and a significant amount of hardware work. So my background allows us to do that. But I think the other side of having done a lot of startups, for me, startups are about speed. And our name Lightning was really about speed and speed to market and speed in terms of developing a product, but also in terms of the product feel, wanting something that is very quick and accelerates like so many electric vehicle aspects to these components. So that experience I have on the mechanical side, on the startup side, allows us to really accelerate quickly. And like I said, then the partnerships with our teams that have been public and know how to be public means we can make both sides of this work and really take off at lightning speed, as we like to say.
Awesome. So can you tell us a little bit about the fleet electrification offerings from Lightning eMotors?
Yeah, so that's something, Chris, we like to talk a lot about, because one of the unique aspects to us is these are vehicles that are on the road. So when I talk about vehicles, these aren't speculative vehicles or vehicles we're designing. It's also important to note, in the commercial vehicle space, these customers expect reliability, and they know that they don't trust anybody saying these vehicles are reliable. So the fact that they've been testing our vehicles in some cases for 3 years, on the road with these customers, means when I talk about these products that this is a viable product. It's a product that we already have a factory on. So what we've done is develop a software platform and a hardware platform that allows us to electrify a very eclectic and customized set of vehicles in the medium duty urban segment. So I like to use examples like shuttle buses, which we do a lot of, ambulances. When you think about bucket trucks and you think about motor coaches, these are vehicles that don't just fit on an easy platform, or you can't just take an electric motor and stick it in there and call it electric. There's a lot of complexities around the electrification systems, where the lifts go, how you support lifts and major air conditioning and ventilation and heating systems in these big vehicles. Whether you're thinking about a passenger vehicle or other, how you handle large refrigeration systems in these trucks, and then how you do it in a modular fashion, because you think about a medium duty urban truck, as you put more batteries in it, there is a payload trade-off. So it's not as easy as a passenger vehicle where you just loaded up as much batteries as you can fit in the vehicle and afford. In this case, there's one other parameter, and that's payload. And that has to be managed very carefully with each customer. So having a modular hardware and a modular software solution allows us to quickly customize these vehicles in a cost-effective manner and get them on the road for these customers, and therefore gives us a wide platform option. So we're doing today, we just announced a new Generation 4 to our Ford Transit van platform, which is a Class 3 platform. No one else has a Class 3 van platform, and we're able to electrify that as an ambulance. We're able to electrify it as a passenger van. We're able to electrify it as a school bus. We're able to electrify that as a last mile van, and we have customers in all of those segments today, all the way up to a motor coach, where again, you've got a motor coach with a bathroom in it. It's highly unique. These vehicles, we're even doing double-decker motor coaches. They're highly unique. You can't just stamp them out on a skateboard kind of solution. So that's our business. That's what we're good at, is taking a very complex, highly customized market and making it elegant and cost-effective.
Okay, and then so I know the presentation talked about you being the only company to complete a delivery within the Class 3, Class 4, Class 5, Class 6, and Class 7 markets. So can you kind of talk about that key first mover advantage that you have within those different segments?
Yes. So, Chris, it's a great question, because when you think again about how you're going to do all these different size vehicles, and I think it's important, a lot of people don't intrinsically know what a Class 3 or Class 7 vehicle is. So I'll line that up a bit. A Class 3 is a large van type product, or a small truck or a large van, as you think about that, all the way to Class 7, and which is things like very large refrigerated trucks, delivery trucks, or a motor coach type application. So as you think about that entire spectrum, each one of those kinds of vehicles and each one of those platforms requires testing. It not only requires testing the vehicle in cold and hot, under different payload circumstances and different driver circumstances and different geographies and different hills, it also requires validating it with the customer. The customers want to prove that the lifts they use work and the upfit equipment they use work, and they want to prove, in the case of a passenger kind of product, that their passengers like the vehicle. And so that takes time. That doesn't happen overnight. So to have gone through all of that with our customers in each of those different segments gives us a very solid 2 to 3 year head start on everybody else in the market who's talking about having a product, et cetera. The other aspect of being out there ahead is there's things that many people haven't really thought about, like how are you going to service these vehicles? We already have service partners in place nationwide, and in a few places worldwide. We already have the spare parts networks in place, and because we're often using a chassis from a major manufacturer like Hino or Ford, the ability to get things like mirrors and ball joints and tires and wheels that are very common challenges to a fleet customer who's out there 7 days a week in these vehicles, that infrastructure for us is already in place. We already have it there. We're already servicing customers with that. Whereas many other people who are talking about this still have to go build a nationwide service network and a nationwide parts network and nationwide support network. So we've done all of those things now, and those are significant barriers to entry that many people talk about, and we think about the product, but the rest of the ecosystem required to have a product out there that services this highly customized market takes time, and we've already done that time.
Okay, and then so I see Amazon and DHL listed in the presentation as two of the big customers. I know everyone watching in the chat, I've seen a couple comment on Amazon. So I'm wondering if you can give us any color on the deals that you have already signed with Amazon and what the future relationship kind of may look like with them.
So I think it's important to know, and important for one of the key questions we get all the time is, are these customers, whether you're talking about any of the big names or small names, are they going to sole source with you or with anybody? And the answer is no. So I think it's important to note, in any big name customer, we don't expect to be sole sourced. And I know that's disappointing to some people, but the flip side of that is no one's going to be sole sourced. So when you look at somebody, and I'll use, because you brought up the name Amazon as an example, they have a very large number of vehicles and a very large number of different kinds of vehicles. So many people think about the delivery vehicle that shows up at your door when you think about last mile delivery. But in fact, every last mile delivery company has lots of other kind of vehicles, from step vans to the intermodal vehicles, which take bigger vehicles that take product from distribution center to distribution center. So there's a wide variety of vehicles available out there that are required in intermodal. And our goal is to find the white space. Our goal is to find the areas with each of our customers where they aren't excited about someone else's product, or no one else has a product offering. And so you think about, for many of our customers, think about, for example, our Class 6 product, which has much less competition in terms of vehicles on the road than say a Class 4 product does, or a Class 2. We don't compete in the Class 2, but there's a lot of Class 2 vans coming to market that we all have heard the names on. So we don't build a Class 2. We don't compete in the Class 2 product, and Amazon and others will certainly buy Class 2 vans from other people because we don't make those. But when we get into the products we do make, like electric step vans, or like fuel cell Class 6s, we feel very, very confident that these last mile delivery companies will be buying those products from us, partially because we're unique, we have the only one available, and also because we make a great product. So those are the kind of discussions we have with all of the customers in the space, is finding where we can truly have our differentiation, and where we can have a product that they can't easily get from other people. And that's the spot we'll occupy with all these customers we have.
Awesome. I want to move past vehicles for a minute. So along with the electric vehicle, fleet offerings, you have two other offerings with energy as a service and Lightning Capital. So can you share some details on these and why those are important segments within the ecosystem?
Certainly, Chris. So I think this is another area, again, where people think about, and obviously there's been quite a few charging companies recently, SPAC and others, and we are partners with many of those, and big believers in the charging infrastructure and ecosystem. But when you think about fleets specifically, most of these trucks don't and can't easily charge at a public charging station. So you'll very rarely see a Class 6 truck at a CVS parking lot charging up in a public charging station. They don't fit, for starters. They don't fit under the garage. They don't fit under the awnings in many cases. So most of the fleet trucks and buses need dedicated charging at depot. And that adds some additional complexity. It's not just a matter of a charger, a piece of hardware, but when you think about scaling that and you say, okay, now I need 10 of those or 20 of those or 30 of those, now there's a whole host of new complexities around, do you have enough upstream power from the utility provider? Who's going to install it? How do you take advantage of the various grants and renewable energy credits and LCFS opportunities that are out there? And we really, the fleet customers told us they needed help. They wanted help in that that space. So we developed those products and those offerings as an enabler to our vehicles. And we found, obviously, they are profitable. They're great products to be in, but most importantly, they enable our customers to scale up our product. And there weren't other people in the markets ready to scale for some of our customers at the rate and size they needed to scale privately at a depot. There's a lot of groups working very diligently on the public charging, and that's very important. And we're happy to see it. But our market in the fleet vehicle space is about scaling at depot, and it's just a different model and something we felt we could uniquely serve and solve. And we're doing that today. Financing, you look at the same route. Again, it looks easy. People have been financing cars for years. But when you think about electric vehicles, you have these challenges around what is the residual value in 7 years? And the answer is no one knows because they haven't been out there 7 years in many cases. So as you all know from in the passenger vehicle space, they're just now beginning to get some of the auction data on what those vehicles are worth at year 3, 4, 5, 6, 7, 8. But in the truck space, that data doesn't exist. So we've come to the market with a finance solution where we augment that and we fill that market because we know what customers do want the product, and we know how good a product we built, and we know that product's still going to be a robust product when it comes off lease in 3, 4, 5, 6, or 7 years. We can therefore fill in that market and place the confidence and help the finance organizations that we work with provide a very cost compelling and competitive rate to our fleet customers to scale up and move forward with scaling their fleets with electric vehicles.
All right, and moving back to vehicles, I want to talk about your market share. So 50% in the class 3 to 6 market. How do you see that market share kind of shaping out over the future?
So we're committed to staying in front of it. And I think, with today's announcement of a Gen 4 Transit, with a fourth generation Transit, this is now moving into the fourth year of that product, and moving way ahead in terms of range, in terms of being the only class 3 van available today. But not only is it the only class 3, it's also available in fuel cell and battery electric. It's available with up to 250 miles. All of these are industry leading aspects to this product. And when we look across our product line, that is our commitment, is to lead across the entire product line. So part of obviously going public is having additional money to really double down and triple down on our research and development efforts to stay in front. This is a very fast moving market. Every day something changes in terms of components and supply chain and opportunity. And we're committed to staying in front of that and making the investments to be the best that there is out there and continue to hold market share.
So I want to move on a little bit to your competition. So in the presentation, I saw XL Fleet, Hyliion, and Nicola mentioned. So can you talk a little bit about your competitors and when you see them, really hitting the market with their products to take you head on?
Certainly. So I think it's important. One of the things I like to say is this market for the foreseeable future will be supply constrained. What I mean by that is, if you look at the customers out there with a $68 billion total addressable market right now and growing at a very fast pace, there is a lot of business for all of us to take. And for the foreseeable future, customers won't be able to buy as many electric vehicles in this commercial vehicle space as they need to have to meet regulatory requirements, as well as want to have, because they're less expensive to operate and overall pencil out. So there's certainly room for everybody in the market. And I think that's a very important aspect. People, we all like to think of competition as winner takes all. And that's definitely not the case in this market. There is a need for everybody, and all of us will have our own niches. And you look at folks like Nicola and Hyliion, for example, that are focusing on a Class 8 product. We aren't building a Class 8 tractor trailer truck. It's a totally different market. It's an over the road. We think about urban. So we're very focused on a different customer base, a different product. And so we don't see them coming to market with a direct competitor to us anytime soon. They certainly have not announced anything coming in the direct competition market, nor have we. We are not planning on building a over the road tractor trailer product. So we aren't planning on competing with them, nor are they planning on competing with us. When we drop down into XL Fleet, we have been friendly with them for a long time, certainly know their products because we grew up in making hybrids. So our first 8 years of our business, we're building hybrids. We generally focused on the big vehicles, and they have generally focused on the small vehicles. If you look at their website, you'll normally see pickup trucks and small vans. When you look at our website, you see big trucks and motor coaches and shuttle buses. So we've always focused on a different class of vehicle, and I expect that to continue because there is different aspects to that kind of focus. It is a different technology to build a shuttle bus than it is a pickup truck. There's a lot of different aspects to how you do it and different supply chain, et cetera. So we believe we'll continue to be differentiated in terms of doing different vehicles than XL, but also it's important to note we made this transition from hybrid to battery electric 3 years ago. And it takes a long time. Again, this is a different product. It's a whole different software suite you're developing to go full battery electric, a full different supply chain, because now you have to service all of the power steering and power brakes and heating, ventilation, and air conditioning and dashboard control and take over the whole CAN bus. In hybrids, you don't do that. So we know how long it takes. And I would say, they'll have to learn, they'll have to learn what they don't know today. But I believe to the base of your question, when will they have a competing product? I expect we will continue to stay differentiated in terms of having different vehicles available.
Okay. And then I want to talk about manufacturing capabilities. So right now, you have a current of 1,000 annual units, and you want to get that to 20,000 annual units by 2025. So what will it take to bring manufacturing capabilities up to that level?
So we've worked hard to build a scalable solution. I think you see this with everybody who's working to scale in this market, that you have to. The unique aspect in this medium duty space is there is a lot of customization. So obviously it's not just a matter of putting billions of dollars worth of robots in and calling it good. There has to be some innovation around how you scale this kind of semi-custom space. And that's where we've done a lot of work around how we leverage a building block of software and a building block of hardware and modular hardware to make it happen. But even with that, it takes a combination of supply chain partnerships and an ecosystem. It takes a combination of factory space. I think you've seen it. The nice part is we've been very fortunate with factory space. We have a lot of growth room, 1 million square feet of factory space to grow into. And we're already, we'll make announcements on how we're coming on that. We're already starting to take down some of that. So we're very excited about where we are in terms of having available factory space and ready to scale. But there is more to that kind of growth than factory space. The supply chain, I would say, for everybody in the business is one of the biggest challenges, because the supply chain has to grow with us. And in that case, some of the things we're, really as we scale, part of what we'll have to do is vertically integrate in some cases where the supply chain isn't ready to scale at the rate we need to scale. So those are all things we have to do. We're already working on many of those aspects that have to take place, because there's long lead items there. When you look at our 2022 numbers, there's a lot of long lead items to make that happen. And we're already making some of those capital purchases and designing the next factory for 2022 today to make sure we're on top of that and in front of that.
All right. And then along with the unit growth comes revenue discussions. So I see a compounded annual growth rate of 198% from 2020 to 2025. That's a pretty staggering number. So I'd just love to hear more on what the plan is to get to $2 billion in revenue by 2025 from Lightning eMotors.
So I think the first question everybody has is the market and the customers there. And as I was mentioning earlier, that's the part that's the easy math in this equation when you look at the customers. So when we carve out, and you'll see in that deck, if you take just 11 customers we already have today that are already starting to scale with us, 11 of those customers have 450,000 vehicles right now, and growing to 600,000 or 700,000 over the next 5 years. So the market is not only large, but it's growing. And that's just 11 customers. That's not 2,000 fleet customers that are available. That's 11. And those are all within the United States. So that doesn't include the growth we're seeing internationally. So the market is absolutely there and wants to see this grow and will grow. Then you think about, why are they going to do it? What are the drivers? And the biggest driver, of course, beyond the fact that they have to do it from a regulatory standpoint, the other big driver is the fact that the product pencils out, as I like to say, meaning today, when you take a lease of that vehicle and you compare it to the lease of a gasoline vehicle and you compare the rest of the operating costs, our vehicles are cheaper over that lease term of the vehicle. So when it comes down to raw economics, it works. When it comes down to regulatory compliance, it works. And then when it comes down to customer satisfaction and liking the product, it works. The customers like the products. Their customers like our products. When passengers get in a Lightning shuttle bus, they love it. It's quiet, it's smooth, it works. So we feel very, very confident in the foundational aspects, the products there, the markets there. And then to your point, on the other side is how does the competition lay out? And as we talked about earlier, for us to take essentially $2 billion of a $68 billion market, as I pointed out, there's room for other competitors there, and we've still got plenty of room to grow. So from all of those capacity aspects, it's there. So then you walk down and say, do the foundational aspects of the customers there. And that's where, because we've been in the market and our customers have been testing these vehicles for 2 or 3 years, the customers have been buying the vehicles from us for a while. They're getting good experience with the reliability. They're now ready to start that scale process and to replace all of their vehicles with electric vehicles moving forward and to make all of their new growth and new purchase vehicles electric. So we have really strong confidence because of all of those aspects of the business.
All right, just want to jump in here. One of the questions that I have, Tim, is that I've been really paying attention to how companies have been releasing more and more information about going deeper into carbon neutral, and really that being the focus to some of the top large cap stocks that we all look at, whether we're talking, Amazon, Walmart, a lot of these big fleets are going to be pushing towards that carbon neutral. How do you think this is going to affect your company going into 2021?
Mitch, it already is having a positive pull from the customers. But I think it's important to note in the past, there was some of our fleet customers 10 years ago when we were doing hybrid saying, hey, giving it lip service. But I think one, as you point out, Mitch, these customers are getting very serious and sincere now, and they weren't 10 years ago. So I think it's very important to note, we see that at the ground truthing. When I'm talking to these customers, they're being very sincere and they're saying, Tim, there's a lot of peer pressure from our competitors, from our employees, from our customers that we now have to do it. We can't just give it lip service and greenwash this. So that's one aspect that we see being real and actually driving customer pull and driving customer demand and revenue for us. But I think it's important to note, even with that, I still believe that we have to have a product that customers love and that they fall in love with, and we have to have a product that pencils out. And those are as important as the sustainability aspects of it to our customers. And so the reason why I'm so bullish on this is not only because of this sincerity we're seeing from these Fortune 500 companies to be green and to do the right things with their fleets and sustainability and transportation, but also because the other legs of the stool stand up and make it easy for these groups to actually be sincere, because the investment is not overwhelming.
Yeah, I'll definitely be keeping my eye out, as I've been seeing more and more. I mean, you even see commercials nowadays about this topic, and this is something that I you never saw 10 years ago. So definitely it's going to be on my radar, just because I've been looking at EV as more as a generational play, and how is this really going to develop in the long run? There's going to be demand there, I think, in the long run. So how can we really start moving towards that? And with the Biden presidency, I definitely think you're going to see us pushing more into greener plays. So thank you for coming on, Tim. I know Chris might have one last question. If not, we'll go ahead and get you out of here. I appreciate you coming on, though.
I've got a question from the chat here. So how much cheaper is it for fleets to electrify their existing vehicles rather than buy new vehicles?
So as you know, Chris, and I know we're getting near the time, so I won't elaborate big, but one of Lightning's uniqueness is we not only assemble brand new vehicles, we also provide a repower solution for many of the vehicles we service. So when you think about a motor coach, they often get throughout their life, their long life vehicles, they usually go through multiple engines or powertrains throughout their life. Rather than replacing them with a diesel, replacing them with an electric powertrain is compelling. The upfront cost is typically about more than 2x more expensive, but the operating cost is about 80 to 90% cheaper. So what we find is by using Lightning financing to finance that product with our partners, when we finance those powertrains over 7 to 10 years, the customer's usually saving between $1,000 and $3,000 per month on the total package. Meaning, if they compare it to putting a diesel repower in there or buying a new diesel vehicle versus putting one of our repowers in there, they get a monthly savings on that total package that's very material to their business.
All right, and I see one more question from the chat. Brendo asked, any plans to take this tech to the water with boats or wave runners?
I personally like the other aspects. When you think about what traditionally has been off-road space, whether that's marine, whether it's power gen, that our ability to make unique products that can be fuel cell, can be BEV, and can go in other applications, and integrate that quickly with a modular design, we can certainly do that. And I personally have an interest in doing it. So certainly keep your ears to the ground as we grow and expand.
All right, I think that's going to do it for us today. Definitely thank you, Tim. I really appreciate you coming on and really informing us on a lot of these different aspects. You know, a lot of everyone will say that, you know, they're going to grab every little bit of market share. I like the transparency. I truly appreciate that. I know Chris will go ahead and get you on out of here, but thank you.
Thank you, Mitch. Thank you, Chris.
Yeah. Big thanks to Tim for joining us on the show today. We look forward to following the progress of Lightning eMotors within this space, and maybe having you on the show in the future. So thanks for your time today, Tim.
I'd love to be back. Thanks, Chris. Thanks, Mitch. Appreciate it very much.
Take care. All right, traders, like always, we bring you guys the experts and the executives that you guys want to see in the SPAC industry. So definitely leave a comment below after the show. If you got anyone that you want to go ahead and bring on, we'll go ahead and get them on here. You know, Chris has been working every single day to get more and more executives on. So if you guys want to stick with us, hit the like below, hit the bell. You'll be notified every single day that we go live. And anything else you want to leave off here, Chris?
No, I think that's it today. Another great show, another great CEO interview. We've got a couple more coming up, so stay tuned, guys. And as always, SPACs Attack, Monday through Friday, 11 a.m. Eastern Time.
All right, like always, want to give a special shout out to my man PJ Williams with the $10 tip. This is the man always here, always supporting. Like always, guys, we do this for you guys. At the end of the day, this is what we did this for. You know, Chris and I talk SPACs every single day. So we said, why not go ahead and share it with you guys? So hit the like, hit the bell below. We'll see you next time on the SPACs Attack.